Well, guys, this market seems unstoppable, but realistically, is it? In previous history, we've seen this level a few times, and in today's video, we need to take a look at what this means. On top of that, bonds start to potentially break. The US 30 years hitting 5%, and it has everybody starting to question, are we about to see a huge risk-off event? With leverage equities, specifically in exchange-traded funds on the rise, that means that retail traders are going all in. And with Tesla hitting its second take profit target and call wall, and Nvidia doing the same thing over the last 24 hours, we have a lot to talk about. Options flows, some big dark pools, and of course, some data that will absolutely blow your mind. Let's go through all of it right now together in today's Daily Show. Well, welcome back everybody to the Daily Show. My name's Tom, and in today's video, we have a lot to discuss, including the call walls, both with Nvidia and Tesla being reached, whether we've seen the bonds market start to freak out yet, and of course, the opportunities right now that still are present. But before we go into insiders, the dark pool, and the options flow, a quick announcement again. We have a Sydney free trader event coming up on the 4th of June, and we will be providing, of course, drinks and light food. So if you are interested in coming, we'll be sharing some information that we haven't done so before, and it's always great to see so many of you. Remember, the big thing about trading is also meeting other like-minded members in trading and investing, and you can do so at events like this. So it's a little bit of a thank you for you guys, and we hope to do it in more places around the world coming into 2025, 26, and so forth. It's always awesome seeing how great you guys are. So make sure to attend if you can do so in Sydney. Now let's talk about growth in leveraged ETFs. Now this is a big problem, of course, in the US markets, and it's becoming a bigger problem every year, especially as more of us retail traders start to find out about the beauty, or maybe not beauty, of exchange traded funds that are triple or even quadruple leveraged. You'll actually see a big trade later on today in the video where we take a look at a dark pool and a quad leveraged fund, but have a look here at the rise of the triple leveraged, and more importantly, how everybody is stacking in on triple leveraged once again as this market is recovering. In fact, in some ways, the triple leveraged is almost outpacing the actual market in terms of the managed growth, and it's actually doing very, very nicely. Now, why is this important? Well, of course, when retail goes all in on something, we need to be a little concerned, but maybe not quite yet in terms of the longer term picture. And that's because, as we mentioned back in March, while the markets were falling, and of course ahead of everything to do with Liberation Day and all of those kind of big sell-off events, we actually saw insiders continuing to purchase their own stocks. And this had us thinking, well, when we see insiders do this, do we tend to see good 3-month and 1-year stats? Well, as it turns out, of course we do. And 3 months later, we're actually above where they were purchasing. So again, it just shows you insiders, they tend to take a pretty long-term view on things, and it's something to pay attention to. So have we hit an overbought level? Well, we are in the danger range now. And for many of you out there, you would know that RSI, Relative Strength Index, is probably one of the major technical indicators. Usually the 14, the default there, is the most popular, and above 70 is considered the danger zone. So with the NASDAQ, it tends to be a very interesting read because it happens actually quite close, more so than maybe a currency or a commodity would, near actually little peaks. And we've just hit into the 70 once again over the last 24 hours. And this has, of course, many people saying, is this the end of the bull run so far? Are we actually going to see some consolidation? Well, thanks to Subu Trade, we do have some stats here. I'll tell you what, that 4 days later, only 9% of the time are we actually bullish. That's less than a 1 in 10 chance that we're bullish 4 days later after a read like this. And that's pretty wild. 24% of stocks in the NASDAQ now over RSI 70. And of course, this is a very interesting read again, because it shows you that while everything looks hunky-dory, remember, we still do have tariffs on. And while they were reduced, the market's celebrating it like we're back to where we used to be, which is between 2 and 3% tariffs. So just keep that in the back of your mind. If we're 10 across the world and potentially that 30% on China, then we were realistically 2 to 3% when markets were at all-time highs. So is this really as big a celebration as we should be having? On top of that, we do have some good reads for the next 3-6 months. So will pullbacks be met by bull demand? It does seem likely. We don't tend to see these bull thrusts all fail at once. And now we have our major three, the 7070, the Zweig, and the De Graaf, which obviously means that it is a pretty strong thrust that we've seen here in markets, and they do tend to be bought up if we do see dips. Now, when we've had all of these reads together, these are the stats. So again, shakiness can happen over the next couple of weeks. Then notoriously, it turns into a pretty bull fest in terms of markets. And in terms of how big a pullback could we have after events like this, well, thanks here to Finome Group, Ariani, we can actually see here that the worst stats seem to be 12.16%. So that's the worst. The average kind of seems to be around 5. So could we just basically pull back to the 200 daily? We certainly could. And that brings us to, of course, the 200 daily breakout. Big deal, huge stuff. Obviously, you do not see this all the time. 200 dailies tend to be very bullish stats in terms of showing that markets will want to continue to rally up. And we talked about it being a resistance ahead of the US-China deal. We obviously saw the US-China deal that broke above it, and that changes, in many ways, everything. Along with the 7070 breadth thrust and the other ones, we tend to look at this as a pretty bullish stat. And in our previous video, we discussed the idea that once you've returned over 17% from the bottom, in the cases like this, that we'd never actually seen the market go straight back into a bear market. It had usually gone up, maybe made an all-time high, and then potentially returned to being a bear market later on, as in that's where we would actually see a recession or something else. So the chances are for now that at least big pullbacks will be met by bull demand, and a lot of this has to do with semiconductors. Remember, they're now free-flowing around the world, as we've seen Saudi Arabia and other countries being able to now buy semiconductors, and they're purchasing out of control, which is obviously helping Nvidia's stock price, semiconductors across the board, and now AMD as well with some extra announcements. Buybacks, we won't go back into this chart. We already know buybacks are helping to support this market. And we also know that actually on the trend, so far, Trump versus other, let's say, presidents that have changed kind of the system, that we usually actually do see recovery back to potentially all-time highs. And then the real question becomes around that 200 to 250 days in office. That seems to be where a lot of the markets either continue on and it's all good, or they tend to break. So could that be in line with tariffs as well? Remember, tariffs tend to have a minimum 3 months or 6 month kind of window to actually see weakness in markets. And it takes a while for these things to flow through. Now, in terms of the way that we're following this market right now, we were following the idea of the 98 narrative. We obviously saw the US-China trade deal push through that high by more than, of course, you would suspect. And that leads us into maybe it's more like this one. Now, this would not show if bigger pullbacks had happened, but this is the 96 narrative. So both in the same period, both in, of course, a new technology's time, and both kind of correlating quite closely with each other. Like any correlation, you don't use it by itself, but if you do see the signs, it can be helpful. And as we mentioned, the big thing that's changed this time around is infotech and semiconductors are absolutely leading this market, as we first saw about 2 weeks ago now. Large trades. Let's talk about dark pools. Fairly large trade 48 hours ago. Nothing really to write home about, but since then we have seen a couple of others. We got a really large trade on a 4 times leveraged ETF here, SPY-U. And you might say, well, wait a second, wasn't that a little while ago in price, and isn't this chart outdated? No, it's just that because it's a triple leveraged or quad leveraged fund, it underperforms when it's recovering because of the nature of how it rebalances. So just remember, if you are trading these triple leveraged funds, they're not as good as you think when you get the direction wrong and you have to hodl those particular positions. You can see here it hasn't even broken a new high, and obviously the market is more trading around this point right now. Either way, big position. We have seen previous dark pool positions be sold, as in they were most likely sold into distribution, and that leading, of course, into a sell-off itself. So another big sell that's coming through. Not that notable, I would say, though. We're still looking for bigger ones. Maybe in the next 24 hours we get it with some news coming through. On top of that, Bitcoin, big trade here. I would say it's probably a profit target in terms of the size is identical. We saw a purchase here in the accumulation, and most likely a sell now that Bitcoin has reached near its all-time highs. So as this market is distributing, you'd have to think that somebody's saying, you know what, good profit, lock that baby in, and then move on to the next one. And that does seem to be the way it's going with Bitcoin at that stage. Could this be a correlation across the board? The RSI on the NASDAQ, the US 30-year hitting 5%. Well, certainly a few more worrying signs there, but still no price action switch, which we will be looking for. And obviously that is the reaction. So often having patience is the best place, especially if you are looking to go against the current trend, which is bullish. Baba is the big announcement here before market open. So far, some pretty big announcements coming out of China. Tencent had a really good session in the previous day. It had a pretty good earnings report. And of course, Baba is now the new focus. Walmart and John Deere also in focus. And just remember, guys, the expected moves are the key here. And we do expect that Baba will be between 7 to 8% according to the bonds market and the options market. So let's now have a look at the big problem right now, which is, of course, for gold and then inadvertently silver, which is that everybody's crowding into the long gold. Now, you guys know we love gold here on the channel, but we love it during the correct times. And we've been a little bit off it recently because everybody has been stacking it. Now, don't get me wrong, gold's great in geopolitical times, but it had a little bit too much of a move. And now it's broken underneath the key 3,200 level. So we'll look at that later. But still, silver is holding very nicely to gold. Remember, as a ratio, gold is really highly priced compared to silver. Silver's been terrible investment since the 1970s, absolutely terrible. But it is hitting some key levels here where notoriously silver should outperform gold. And so far it has been, since we've been talking about this, but that hasn't actually led into silver kicking ass. And there are a couple of levels we'll talk about that probably will be where silver starts to get momentum. Let's have a look at the S&P and we'll look at central bank liquidity. Central bank liquidity completely flat. Interesting to see whether that spikes off the fact that we've just seen yields get back to the danger zone. And with yields getting back to the danger zone, we have to ask ourselves the question, will the S&P 500 complete to 59.50? That's really the next resistance. There's no signs of significant weakness just yet here on the markets, except for indications of overboughtness. And as you can see here on the US 500, we're still barely holding on to that last big VWAP level. So we're just kind of barely holding on to the bull trend. We did see a lower high, which is right here. So of course, this is possibly going to be seen as a double top from some people, but not strong enough yet to really say, okay, the trend has changed or anything like that. Still looking at a 59.40, 59.50, options high and low levels updated for today, guys. And the big thing, of course, comes back to options. So let's take a look at the options. 5,900 plus, positive gamma, squeeze, 59.50 becomes the next level, as you guys can see here. This is taken as of the 15th. So this is the 15th. And then the 16th is 5,900 as well. So really, we just have this huge call wall on 5,900. There's no doubt options are there. And we're seeing these options call walls actually across all current price. So even though we don't have a technical resistance, we do have an options resistance. 350 on Tesla. Well done, whoever took this thing. Absolutely banging. Straight into the 350. 330 our first target. 350 the second target. For me, yeah, you could maybe fandangle a 355, 360, but it has hit that key technical resistance for that move. And it's another call wall. And then, of course, we have another call wall on NVIDIA. Amazing run, doing really well. But 135 is the largest strike. It's the largest strike right now. If we get through 135, it's possible we go to 150 and then maybe even we eventually get to that magical 175 area. But for now, 135. So we've got call wall on the S&P, call wall on Tesla, call wall on NVIDIA, arguably three of the most important option stocks out there as we reach the US 30-year yield at almost 5%. So will this freak the market out? We saw last time everybody go, whoa, 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 whoa. And there was kind of like almost a relax everything kind of campaign put out there. Now we're back at 5% on the US 30-year. What's going to happen here? Very interesting level, guys. Certainly a danger zone. And we've had this alert. So we've now triggered the alert again. So now we look to see whether we close above 5. And will this actually get anybody shaking out there and a few bears coming back in? It is the danger zone for yield. So, of course, we will be watching that. And it's putting pressure on treasuries as well. In terms of the spreads, we're not seeing risk coming back into the bonds yet. Now, these can be delayed by a day or two. So do remember that. But so far, this has been absolutely risk on ever since we first looked at it and said, wow, things are changing around that 9th, 10th of April. So far, it's still saying risk on the markets. Dollar index, big bounce off the first support of 110. And you can see here, still looking towards 102.56. Dollar strength equals gold weakness. Gold, frankly, looks really bad. It might pull silver down with it as well. I think ratio-wise, silver will still hold very well to gold. But you can see here, that's a bad close. And there's no way that you can't look at this and say double top, weakness. There's nothing on the left-hand side holding it up. So I could see gold going down to 3,000 and possibly then being an actually very good buy. But at this stage, yeah, there's no strength here in gold. And I think what a lot of people are going to be doing is looking at this and saying, well, I'm going to track it by some kind of VWAP and just basically look to sell the rallies for now. If we get a change of trend, that could be different, but the day did close under 3,200, which is not exactly strong. Now that's putting a lot of pressure on silver. Silver's back down here at this mega demand area where we've seen previously a lot of wick support and buyers coming back in. But yeah, it's an interesting level. We'll see how the close happens. With the silver discussion that we've been having, really the levels are, of course, a 34, 34.50 to really breach out. That's going to be a crazy momentum period. But for now, remember, this is like a 6-month, 12-month kind of idea. So for those gold silver charts, you've got to always look at it as if we go silver versus gold, you're going to notice straight away that it is in the dirt. And you'll see here, silver is holding very well versus gold. So as a relative trade, that's the key. And then the next thing is you want to see the flow come back in. So for now, we haven't seen that. We are looking, and I still think silver is going to be stronger than gold in the short term here, and also the medium term as well. US oil, what's going on? It has hit the resistance and it has sold off. Nothing much to update on oil. And call wall central across some of the big stocks. Tesla, 350. Well done. Fantastic. Look at that thing. Just before 350, starts to sell a little bit. Absolutely, amazing looking position there. Semiconductors versus SPY. I noticed this is starting to get really overbought. It's gone from this break all the way to this break straight away. That could suggest that semiconductors are ready for now a little bit of a relaxation after what has been an epic move, which has a lot of people FOMOing. And the same thing with Nvidia hitting that big call wall. Maybe not the key resistance on the charts here, but certainly a massive call option. So we do have a lot of call options this week, all at these key levels. Google also playing a bit of catch up, not above its 2050 yet. It's at resistance as well. It's a bit of this going on, but Google's still performing under the market overall. It's been a decent recovery. I mean, don't get me wrong. You've been buying Google over the last week, you're up 11%, which is still beating the market as an index. But yeah, Google's still cheap in some ways fundamentally. And if you go over to our X account, links in the description down below, you'll see we posted some pretty good metrics on Google, other than the antitrust, which have got it, looking better than a lot of the Mag 7 in terms of at least pure fundamentals. HSI, Chinese market at resistance. No real signs of any type of thing there. It's currently potentially accumulating, but we'll update when we see more on that one. And notably, we had more weakness through the small caps. So small caps are really struggling with this 2100 while the NASDAQ is blitzing. So this really shows it is a market led by the big caps, by big tech and semis. That's usually a good sign, frankly, but it means that there are opportunities in mid caps and then small caps later should the markets continue to rally and you feel like you've missed out. So we'll do a special on that in our weekend video. NASDAQ still rallying for now. No signs of weakness just yet. The big key, of course, is the RSI, which as you guys can see here, the 70 RSI is a fairly big deal. Now, when you hit it, you can see here, we actually hit the RSI around this point. It takes a while to consolidate and then eventually does sell off. So this is a double hit. This one over here, yes, you get that kind of consolidation. Remember, yes, they do have consolidation. Yes, they do have pullback stats, but don't get too excited just off an RSI by itself. If RSI overbought worked that well, then it would be one of the easiest things to program in the system. But I would say it's certainly a time to be more cautious. It's usually a point of lackluster returns, so pullbacks in time, as we call pits, or even potentially larger pullbacks. So yeah, we're not probably expecting outrageous gains over the next coming week or two, considering what has been fairly outrageous. Let's have a look now. Bitcoin, could this be a sell? I could see people trying to sell in this area here with stops above this high. That's obviously a bit ballsy because you're doing it against the trend. and it is actually at a resistance, but we did see that large transaction come through on a dark pull. Other than that, it's totally against trend. There has been a small change in the 4 hour and the 2 hour, but yeah, could be also an accumulation. And most people get ripped up doing these types of positions. So it's better to always generally be in the direction of the new breakout, like we were talking about here with the melt up that ended up leading into a nice rally. This could also be just a massive accumulation where we sit for a while. And remember, the longer we sit, the better the break's going to be. So I wouldn't mind for Bitcoin to chill for maybe 2-3 weeks, then break out. That would be, it'd be a cool trade. Let's have a look now at the news. The big news here, guys, is Thursday. And of course, we have the core PPI, retail sales, a lot of stuff going on there. And then we've got this sneaky Chair Powell coming out straight after these announcements. He's just sitting there. What's he going to be talking about here? The Chair Powell coming out of nowhere to do a 10-minute after the announcements little talk. And then we go into Friday, which is the prelim UOM consumer sentiment. So still a decent amount of news this week. Obviously some vol out there right now in markets, guys. And to summarize, I guess, we would say that the markets are still bullish for now, although there have now been a few more signs, specifically the bonds, US 30-year, and this news coming out on Thursday that could be a little bit more volatile. Be careful. It's likely that we've hit call walls across many key stocks, and markets do tend, when there's so much calls there, to try to hold underneath. Obviously, if the levels are broken, we would have to expect more gamma squeeze. If you're in Australia and you can attend the Sydney event, just a quick reminder as well, links in the description and pinned comment to sign up for that for free. And of course, make sure to subscribe if you haven't already, and we'd love to have you in the community. Thanks so much, and we'll see you in the next one. Bye, guys.